Hi everyone. Today let's talk about Speaker McCarthy getting ousted, as well as the economic calendar and the massive jobs report we got today. Then we'll get into the charts. Then we'll look at my abysmal results and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Speaker McCarthy is out, and of course we're going to look at this from the financial perspective. Markets are going to be nervous here. We now don't know exactly what the government is going to look like. Bond yields are continuing to rise. The government is continuing to rack up debt, and they are running out of people to sell that debt to. And even the debt that they manage to get is going to be more and more expensive. And now we have instability in the House with no leadership. He was ousted by the Republican Party for making a deal with Democrats in order to keep the government open. And they were like, no, no, no. Of course, we cannot have any bipartisan action in the House. And now he is no longer the speaker, and nobody knows what the government is going to look like in 45 days when they run out of money once again. They mention here bond yields hit nearly 4.8% after hours today. TLT down another 2.15%. We've been watching that chart fall into the floor all the way through the most recent lows, back into levels we haven't seen since around 2012. And like I said, nobody's sure what's going to happen now. The question is, who is going to replace him? Who can garner enough support? And it seems like the hard right just does not want to make any concessions here in order to keep the government functioning, doing the things that actually affect real people. Again, from the economic perspective, this creates a lot of uncertainty, and it's likely that markets will suffer. Moving over to the Jolts report, let's take a look at what that came in at. Much higher than expectations, totaling 9.61 million, jumped 700,000 from the previous month. Estimates were 8.8 million, so massively higher than expectations. And this drove markets much lower on the announcement. This means the economy is continuing to remain strong, and that we're probably likely to see higher rates for longer. If we see job market weakness, that might cause the Fed to soften slightly. I still don't think they're going to cut this year or anything crazy like that, but this is definitely not going to help the case for lower rates in the near term. And they mentioned the ratio of open jobs to people is now at 1.5 to 1, which is a little bit better than the previous read, but still not great. Moving over to the economic calendar, you can see those numbers here, way higher than expectations. Previous read was also revised up, not great. Looking at tomorrow, we have ADP non-farms at 8:15. I would expect that to be much better than expectations as well. Global composite PMI, global services PMI, non-manufacturing PMI, and then non-manufacturing prices at 10 o'clock. Lots of data coming out there. And this could drive markets even lower if they come in weak. Moving over to Max Payne just for a moment, you can see it's still way up there at 430. That is $1 lower than yesterday. Total options right around 1 million. 420 still an interesting level. 425, we are well below that now. Bottom of the calls are right in that 420 area for Friday as well. So it might look like we're kind of bottoming out potentially for this week. Obviously, we could dip below 420 and then rally back into this zone for the Friday close. But right now, the markets still look very weak. Moving over to the charts, you can see here we basically were unchanged overnight. And then we fell into the morning session, rallied up into the jobs report. Then you got those jobs numbers on the 10 o'clock candle, fell super aggressively into the end of the session, chopped just below my level at 421.50. You can see the 200-day moving average sitting right there at 419.17. Interesting level. Momentum stepping back towards bearish, not what you would want to see if you were looking for a bit of a bounce. So this looks much weaker here now. Zooming out just to show this structure, you can see the high, lower high, did have a slight pullback, and then we broke down, taking out this midpoint. 200 SMA has to hold if we are going to find some strength. Like I said, 419.17, absolutely critical. Moving over to the NASDAQ, not nearly as dramatic. Did rally up a little bit, did fall, followed the same pattern, rallied into the jobs report, fell into the end of the session. But this was not nearly as weak. We did not take out these previous lows. We're not near the 200 SMA here. You can see that's all the way down at 330.99. So tech continuing to hold up pretty well. We are still below this previous midpoint, just barely, wicking those previous lows from 18 August. Zooming out, you can see that same structure, high, lower high, not great. But right here, we're at a low, Slightly lower low, but not really very convincing here. And you can see quite a bit of strength actually on that RSI read. RSI lows were on the 26th at 33.17. Current RSI read is 37.68 at a very similar price level here. So showing a little bit of strength potentially on that RSI. Obviously the data tomorrow is going to drive this, and then we have non-farms on Friday. So some data to come here, but overall NASDAQ looks pretty good. Moving over to the Russell on the daily chart, I want to do this one individually here today. We did have another massive breakdown, took out the trend, took out my horizontal support, came all the way down to my next level at 170.35, just missed that level by 2 cents, so came down into that same zone. You can see we're right at these wick lows here from April, back into this previous consolidation. We talked about this being really the price target off of this head and shoulders pattern. Sure enough, we ended up getting into this area. I thought maybe this low from 26 September could end up holding. We did show a little bit of strength at the end of yesterday's session, but with the Jolts report here today, we broke down through all of those levels. Now we're testing an interesting area here. If this breaks, you could look to these previous lows from September of 22. That's down around that 164 area. Absolutely could go there. But remember, the Russell has been chopping in this zone for many, many months at this point. I don't necessarily think that we're going to break out of this range completely, but if this 164 level breaks, that could be an absolute disaster here for the Russell. Moving over to the Dow, similar thesis, big leg down. Held support at 329.40. We talked about that being the next level. Sure enough, touched that level, found some support. Interesting. You can see we've interacted with that level multiple times. Whether that's going to hold or not sure yet. Next level for me, 325.72, right at the wick low from 25 May. Could be another interesting level here, but this is absolutely a falling knife on the Dow. We're below all the EMAs and SMAs and the highly traded zone on the daily chart. Moving over to the equal weighted S&Ps, looking very similar to the Russell and Dow combined. You can see left shoulder head, right shoulder, big breakdown. We're getting very close to these lows here from March at that 137.23 level. Again, still a falling knife. Interesting level right here. If that breaks, however, I do need to add some levels. We haven't been down there in a while. You can see one probably here at 133.70 or so, right at the neckline before this breakout. That could be interesting. But right now, watching 137.23. Moving over to Apple and Tesla on the daily chart. You can see Apple continuing to hold. Had a nice bullish day yesterday, inside candle here today. Not a great indicator, but it wasn't a waterfall sell-off like we saw across the rest of the markets. Makes sense why the NASDAQ was continuing to hold up. Tesla, similar thesis here, inside candle after the bullish day yesterday. We're still below all of the short-term EMAs and SMAs on both of these charts. Still have the 200 sitting way down here on both charts as well. Got the 144 on Tesla sitting at 224.03. That could be interesting. And Tesla also sitting right on top of its highly traded zone. If this breaks down here tomorrow on both of these, that could be a bigger confirmation to the downside. Tech is continuing to hold quite strong. Everything else is a bit of a dumpster fire. Moving over to Microsoft and NVIDIA. Microsoft, big bearish day. Definitely not the same as Apple or Tesla. Fully engulfed, got below 315, and after hours it's down a little bit more. Next level for me is at 305.74. You can see there's some wick lows basically right where we're at. That's interesting, but really 305 is more interesting to me. Bearish momentum, bearish RSI. Moving over to NVIDIA, very similar thesis. Let's zoom in here a little bit. Big engulfing candle on the daily chart, breaking back below those medium-term EMAs. Momentum still technically bullish. RSI breaking back below the 50 line. NVIDIA continues to hold in this range. Still looks like a topping pattern to me. Again, NVIDIA being very, very strong over the past several months. Wouldn't necessarily want to short this, but a little bit of weakness here at that 55 EMA is interesting on the daily chart. Moving over to staples and discretionary. Basically everything sold off here, nothing super interesting. Next level on staples, 66.27, continues to break down. Discretionary, got to these previous lows and below my level. Next one for me, 153.90. Zooming out here, you can see the last time we were in this range is going all the way back to June of this year. Looks like a massive topping pattern, big rally, lower high setup, breaking down very strongly here now. Moving over to utilities and financials, I just wanted to highlight utilities has really fallen off a cliff here. Had an okay day today, up 1.16%, but on the Friday session it was down 4.65%. Momentum still super bearish. Tons of volume on that down move. Could be bottoming potentially. Zooming out, you can see the last time we were in this price range was September of 2020, so utilities, absolutely a dumpster fire here. Again, could be interesting levels in this range, down around 50 to 54, could be an interesting area. Financials also breaking down massively, was up around $35 just a couple of weeks ago. Now we're all the way down around $32. Interesting level here. Lows that you would be looking for would be around 31.50, could be an interesting level as well. Overall, both of these are a falling knife, and both of these are leading equities to the downside in my opinion. Moving over to breadth, 50-day average, getting very close to the bottoms here at 2.75. I didn't think we were going to make it that low on 50-day average. And I thought this previous level in March was going to hold. Sure enough, we did not get that. We are falling off a cliff now, getting back to the September of 22 lows in that 2.75 area. 200-day average, we are at a critical level right at the wicks from these last two dips. If that breaks down here, this could be an absolutely colossal move. You'll notice that I have basically no levels in this zone. You can maybe argue for one around 30, 50 or so. That could be interesting. But really, we've moved through this area pretty quickly the last few times we've been here. And if that happens again, this could be a massive move to the downside. You do have to be careful. It is worth noting that both of these are in pretty bearish momentum, but definitely oversold conditions. You can still see some divergence on the 50-day average. No divergence here on the 200. This is a new low here for price recently, and that's a new low here in RSI as well. Moving over to government bonds, absolutely on a rocket ship, both of them going much higher here today. The distress within the government that we talked about at the beginning of the episode is definitely going to make this worse. I would expect yields to continue higher with the uncertainty going forward. The government continues to spend absolutely recklessly. And it just seems like they're running out of buyers, and that's part of why yields are continuing to go higher. They have to offer more and more enticing yields in order for people to actually buy this debt. Moving over to the dollar just for a moment, pretty uneventful on the day, chopped sideways, doji on the daily candle. We're still above 106.84, so very bullish. Could be just a pause before we get a continuation. You would expect this to continue higher as yields continue higher. So I'm definitely not saying that this is a reversal style candle, but it is interesting to see as yields continue to rocket higher, the dollar paused here for a day. Looking at bonds just for a moment, not much to say here. Absolutely dumpster fire, continuing to sell off after hours. Junk bonds getting back into the range from September and October of 22. Massive breakdown well through the 89 level. Massive bearish day down more than 1%. TLT down 2.15%, just like we talked about. Look how much volume you can see here. Absolutely tons of selling, continuing to break these lows. You can see the lows from October of 22. Up around that 92 range, we are way below that now. And we talked about the longer term charts. These are prices we haven't seen on TLT for a very long time. Moving over to the volatility indices, MOVE index its massive breakout. We've been talking about this one for a few days. Looked interesting in this range. Looked massive yesterday. Another massive continuation. Next level around 145, that could be interesting. I wouldn't expect this to stop here. This looks very dangerous. And like we saw on the financials, they are continuing to fall off as this goes higher. Volatility indices for the VIX continuing to go higher, got into that 20 range here today, and it held there, which is interesting. That's not what we've seen before. Last time we got here, we kind of sold off. You can see going back to May, we also got into this range and then sold off pretty dramatically. Could be an interesting level. If it holds and rallies through up to 2250, that could be quite bearish. Momentum is bullish. RSI also bullish, indicating some potential weakness for equities tomorrow. Moving over to my accounts, obviously I got squeezed out of that IWM position. Took that off pretty early in the session. It was down about $3 on the day. I only lost about $87, so not terrible, but obviously this is not great, continuing to see red across the board. Q's position, I took off my shares and ended up deciding to leave these puts on to get into new shares at lower prices. That ended up being the right call. We saw stock prices continue lower. They're down a little bit more after hours on the news of Kevin McCarthy. I have two calls on here, one for tomorrow for about another $2 of potential credit there. Another one is actually for tomorrow as well, but it's at 361. Got about $30 more of potential credit there. Probably should have rolled that out for a little bit more money, but these puts are out to 350. $3.54 for a $3 credit. So I have about another dollar until I hit my strike. But these are all the way out to October 10th. And then I have another $3 credit there. So I'm effectively buying the stock at $3.51 sometime in the next week. So overall, I'm telling you that I'm a little bit more conservative here to the bullish side. I continue to play quite a bit of defense with the calls. Still not a complete loss. $766 on my Qs positions. Could have been much, much worse. Still losing only about $1 for every dollar that the Qs went down, despite my leverage. Let me know down in the comments section what you think of Mike McCarthy and the current state of the House of Representatives. Who could potentially replace him? He just got elected and he was already ousted for working with Democrats, which is seemingly what he is supposed to do as the Speaker of the House. But of course the Republicans didn't like that, and now we have more dysfunction. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.